Hey everybody, welcome back to another edition of 3 Question Thursdays. This is where I cover 3 important questions that I've received over the past week. So let's dive right into. The first question is, I am an NRI planning to return to India permanently next year. Should I start liquidating my overseas investments now or after becoming an ROR? This is a common question amongst returning NRIs. The timing of liquidating your overseas investments can significantly impact your tax situation. So here's what you need to know. So as an NRI, your foreign income isn't taxable in India after returning. First, you will have to become an RNOR, which is applied for almost 3 years. Now, during this RNOR period, your foreign income still remains not taxable in India unless it is from an Indian business. Only after becoming a resident and ordinary resident, which is ROR, typically after those 3 years are completed, now your global income will start getting taxed in India. So you may have three main options. First is liquidate now while you are still an NRI, which might be good if you are currently in a tax-free jurisdiction like somewhere in the Gulf, and you can get some favorable exchange rates also. Secondly, wait and liquidate during your RNOR period so that you are maintaining maximum of your tax benefits while giving yourself more time to plan things out. Now, the third is to keep your foreign investments and only bring back whatever you need here in India. So, your foreign income will only be repatriated when you need the money here, and meanwhile, you will pay taxes in India as well as that other country. So, I typically recommend people to start redeeming this money in a staggered manner. This helps you manage exchange rate risk and also allows you time for flexible tax planning also. I think the best approach depends on which country you are actually returning from, what investments you hold, and what are your financial goals after returning to India. So if you need any help, do let us know, because things are different for people returning from Gulf, whereas things are different for people coming back from USA. So that is first question. Second question is, what is the best way to manage Fatca compliances for my Indian investments as an NRI? See, Fatca compliance is essentially for US-based NRIs only. As a US resident or a citizen with accounts in India, you need to report your NRE, NRO, FCNR accounts, mutual fund stocks, and all other financial assets if they exceed a certain threshold. Now, there are two main forms that you need to know about this. First is the FBAR, which is also called as, I think, FinCEN Form 114, which is mainly filed if your total foreign holding exceeds $10,000. Now, the due date for this is 15th April, and you can also take an extension. There's one more form, which is Form 8938, which is required if your foreign financial assets exceed $50,000 for a single filer living in US, and it is slightly higher for people who are jointly filing. So to stay compliant, I recommend these practices. First is to maintain a detailed record of all your Indian accounts. Your account number, your bank names, your maximum balances as of 31st December and income earned. Secondly, consider consolidating all accounts wherever possible to simplify your reporting process. Maybe instead of having multiple FDs, you can bring everything into a debt mutual fund. And third is to be consistent with your reporting across different forms to avoid any audit triggering. So make sure that you work with somebody who is a CA and as well as a CPA at the same time, who understands both countries' taxation laws. Fatca is primarily about disclosure. It's not necessarily about additional taxes. Since US and India have a tax treaty which prevents you from getting double taxed on any kind of income. So don't worry much about taxes. Try to be more compliant as much as possible. We have question number 3, which is, can I convert my existing NRE account to an NRO Non-PIS account? See, the direct answer to this is no. You cannot directly convert your NRE account to an NRO Non-PIS account. However, you can convert a resident account to an NRO account. There's a very simple process that you need to follow. First is select your bank or broker for the NRO Non-PIS account. Then you need to gather the required documents about the modification. You might need your PAN copies, your overseas address proof, your Indian address proofs. What all documents are required from the bank side. And thirdly, once you submit all these documents, you have to place a conversion request through your bank. For some people also allow you to do that online. Now the bank will verify everything, take your process request, which typically takes several working days. In many cases, I have seen it take like 15 to 30 working days also. Once you complete, you will receive a confirmation email. Don't make any transaction until you get the confirmation. Also, if you had a PIS account previously, you can close it after you have converted it to your NRO Non-PIS account. Your account number usually stays the same during this conversion. The process might vary slightly depending on bank to bank. So it's best you confirm your specific requirement with your relationship manager at your bank. This approach allows NRIs to maintain trading capabilities in India through proper account structure while ensuring compliances with regulatory requirements also. So that covers our 3 questions for today. If you have any more questions about NRI financial planning or taxation, please reach out to us, send them to us in the comments below, or join our NRI only WhatsApp community, for which the link is in the description, and we will try to answer those questions there. Thank you, and I'll see you in the next.